Half of the solution is understanding a problem and understanding how we should try and frame things to understand what's really going on out there. So this idea of adding Bitcoin, which is a little over 5 billion, to the 8.5 trillion in the monetary base.
ARK Invest CEO Cathie Wood has made fresh proclamations that Bitcoin price could see significant price gains amid the ongoing financial crisis that has caused a loss of trust in traditional banks. In this video, Wood discussed the challenges facing U.S. banks and reiterated her belief that this will attract more investors to the Bitcoin market. She believes that the cryptocurrency's qualities as a store of value will motivate investors. Although Wood and fellow investor Srinivasan differ slightly on the trigger and timeline for Bitcoin's rise, both are optimistic about its future prospects. This latest development could have significant implications for the cryptocurrency market. Recently, Wood tweeted, after the bear market last year, perhaps equities are beginning to discount much lower interest rates. Pointing to lower real growth and inflation, the fixed income market seems to be ahead of the Fed, suggesting that equity valuations will not succumb to last year's fears. In response to Balaji's statement, Wood replied on the podcast, "We are very positive about Bitcoin as well. But your forecast was in the context of the hyperinflation associated with fiat currencies. Our optimism is more of a function of fears of deflation and counterparty risk. Both of those should accrue to Bitcoin's benefit." Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
Last spring of 22, I was pointing to credit default swaps going up. What's this about? And then the yield curve inverted in July. The yield curve inversion has always led within 12 to 18 months to a recession. And so I was pointing to that. Commodity prices were falling. The oil price peaked at $130 in March of last year, I believe, and nearly cut in half. And I finally wrote a letter to the Fed. I don't know if you saw that, Balaji, but which basically said, wait a minute, you're hiking interest rates 75 basis points at a time and hiking interest rates faster than any other Fed in history, 20-fold within 1 year, it turns out. And here are these conflicting signals, and you're voting unanimously to raise the rates like this. And so I have been much more concerned about deflation. And I think the bank crisis has punctuated that because, and we can get into this later, the two big mistakes that banks have made was assuming that interest rates would stay very low for a long time because the Fed told them that during COVID. And so they invested in long-term government-backed securities, figuring out they'd be money good when they matured. So that was the first mistake. And then the second mistake was to assume that deposits would not leave the system. It wasn't just Silicon Valley Bank. Deposits are leaving the banking system because money market rates are so much more competitive than what people are getting in their bank accounts. So for the first time since the 1930s, we have a decline in M2 on a year-over-year basis. It started in December. It's intensifying. It looks like it'll be down 3% in March. And I believe this has all the hallmarks of potentially a deflationary bust.
Cathie Wood predicts that institutional investors will increasingly view Bitcoin as a diversification opportunity, similar to how they perceived real estate in the 1970s. This will result in greater attention being paid to the cryptocurrency, further fueling its growth. According to Wood, Bitcoin is a store of value and an investment, limited to 21 million units. Right now, the inflation rate is 1.8% per year. That's what is being mined. In a couple of years, that will halve to less than 1% and keep halving until you get to that 21 million. The panic that struck the U.S. banking system this month was no surprise for Cathie Wood. She attributes the bankruptcies of Silicon Valley Bank and Signature Bank to Federal Reserve policy, rather than cryptocurrencies. The collapse of the banking system has created a sense of uncertainty and unrest in the U.S. financial sector that has persisted for several weeks. This latest development highlights the growing need for a more stable and secure financial system. Recently, Wood tweeted that against depressed interest rates on the long-term assets they purchased during the coronavirus crisis, banks now are borrowing at 4.5% to plug deposit outflows, causing net interest losses and lower earnings that will erode their equity and threaten their future.
Now, I think velocity, which when you go through a crisis and the economy seizes up, velocity goes down. When I saw people lined up in front of Silicon Valley Bank, the most technologically savvy people probably in the world, lined up in front of a bank, taking their money out physically, it reminded me of It's a Wonderful Life. I don't know if you've seen that movie, but people waiting in line get their money, and they put some of their money under the mattress saying, I don't know what's going on, but I need to rush to safety. The equivalent was Bitcoin going from 19,000 up almost 50%, in the same time period. So you're absolutely right, Balaji. I agree with you completely. There is a flight to safety, but it is also into Treasury, mutual funds system, and therefore will not be able to contribute to the production of goods and services in the economy. So 4.5% on a year-over-year basis, minus 2.8% sequentially quarter to quarter, that we have then entered a hard landing. And if you enter a hard landing, I think if I'm interpreting what you're saying is, okay, the Fed will just throw money at this thing. It'll get even more out of control. And I would submit to you that the risk is, you may be right, but the risk is what's called a liquidity trap. People holding back even more, not spending anything, fear, real fear. And hopefully that's not going to happen. But I think this crisis has raised the probability of it. And I do not know why consumers and businesses will migrate back to the banking system, given the very low rates there.
Banking crisis is a result of limited depositor diversification and excessive investment in long-dated assets, such as U.S. government bonds. To address this issue, the Federal Reserve is considering tighter scrutiny of mid-sized banks, which could include higher capital and liquidity requirements and more rigorous stress tests. In response to the crisis, Cathie Wood of ARK Invest tweeted a summary and emphasized the need for financial regulators to investigate the signs of an impending catastrophe. This highlights the urgency of creating a more stable and secure financial system to prevent such crises in the future.
Understand, banks always have a mismatch in their durations. That's what makes it a bank. So their assets are long-term. Their liabilities, which are deposits, are short-term. They can leave any time. And so the issue is that held to maturity part of the asset base. Is money good if they hold to maturity? And when they buy those, look, in COVID, when they were getting gushers of deposits from the stimulus programs, the Fed basically said, okay, the risk here is recession. And if you look at their forecast through 2023, the end of this year, they showed no increase whatsoever in interest rates. Okay, so these bank officials are making decisions saying, okay, then I will put my money in this government-backed mortgage security, and I'm planning to hold it to maturity. The problem was, and they would have, and banks typically do. Silicon Valley Bank allocated too much to held to maturity. That's one point. But the more important point is they never expected a venture funding drought, the likes of which we haven't seen in quite some time. And they didn't expect a 20-fold increase in interest rates. As you said, it went vertical and the expectation was quite different.
Cathie Wood shared her views on the current and future state of the U.S. and global economies, as well as the cryptocurrency ecosystem and its response to the recent volatility in light of the regional banking crisis. On this note, we conclude today's video. Do you agree with the Cathie Wood perspective about ongoing financial crisis, rising inflation, and Bitcoin's surge in current crisis? Share your thoughts in the comments section below. If you found this video helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.